Alex?
Now, the interesting thing when we get to migration figures is we get top-line numbers, but we don't really get much of the detail. And it's up to us then to dig down into this and really understand and get a shape of what is going on. So first of all, let's talk about the brain drain, because what is quite astonishing is quite how many Britons, especially young Britons, are leaving the country. 174,000 16 to 34-year-olds, essentially the future of the workforce, have fled our high-tax state in the year to March, accounting for just over two-thirds of Britons leaving the country. So these aren't pensioners going to enjoy a retirement somewhere sunny. These aren't foreigners who are going back home, having come over and earned some money and contributed to the economy, as people would like to say, and then returning back from whence they came. These are the very people that we need to retain in the United Kingdom. What is going on? Where are they going?
Yeah, so Alex, these figures, they are prone to spin, huge amounts of spin by different political parties. You're right, you do need to dig around below the surface. I spent most of yesterday analysing them or speaking to other people that have been analysing them to get to the bottom of this, but you're right. Although the 204,000 is a very good net migration figure compared with 700,000 last year and so everyone says, oh, this is really good, we've got a grip on immigration. The truth of the matter is, as you say, that actually we've got a net outflow of British people, and the net outflow of British people is 109,000. So there's 109,000 more British people leaving the country than entering in this period, and also a net outflow of European nationals. 70,000 more EU nationals left during this period than entered. So the entire intake has been from non-EU countries, Alex. That amounts to 383,000 people that came in with visas. And of those, when you break those down, only 14% of those were actually coming to work. The vast majority of those were dependents of people already here or from students. And that is, although it's 383k, it is a city the size of Newcastle or thereabouts that is being imported from non-EU countries. Whilst in the UK we are losing Brits and Europeans who are sort of more traditionally been here for a longer period. So there's a pretty big demographic change going on in the country, Alex, that's worth talking about, I think.
Absolutely. That is astonishing. I did not know those figures. This is, like you said, you call it a demographic change. I'm going to call it a civilizational change, because what we are essentially seeing when you talk about non-Europeans, we're talking about Westerners, essentially. This isn't about colour of skin, this is about culture. And when you just told me there that only 14% of 383,000 who have come over from, I'm going to suggest it must be therefore largely the developing world, are not working. What are we? The United Kingdom of Oxfam? I mean, this is utterly catastrophic. When you look at the productive workforce, the young people leaving, and then replacing them with a lot of people who essentially are going to require the state to fund them if they're not working. They'll still cost us, whether or not they're on benefits with the health service, education, use of roads, so on and so forth. But also what we are essentially doing is turning up the volume and watching the United Kingdom fundamentally change its population quite radically, quite rapidly, and that is deeply unsettling for so many people. What were the gross figures? Because like you said, it's sort, we had the fanfare, net migration is lower than it's been for so long, and I'm like, hold on, if you subtract the number of emigres from this, the gross figure of people still coming to this country is eye-wateringly high, given that, for the last 2 decades, we've had promises of bringing migration down to the tens of thousands. And it's in stark contrast, looking at that and learning of the 383,000 from non-EU countries, 14% of which work and the rest, Lord knows. It's in stark contrast with what Donald Trump is putting in place in America, which is essentially saying no more immigration from the developing world. He used the term third world. I'm not sure what we're supposed to say these days. But have you, in your history as former head of UK Border Force, seen a picture quite like that?
Global investment patterns in the 21st century continue to evolve as countries reassess their economic priorities, trade relationships, and growth forecasts. In recent years, One of the most notable developments has been the rising investor attention directed at African economies. This shift is not a sudden phenomenon, nor is it rooted in panic or crisis, but rather in measurable economic fundamentals, demographic trends, resource opportunities, and long-term strategic positioning by both private and institutional investors. The United Kingdom, like many other global financial hubs, has observed a gradual redirection of capital flows as investors increasingly consider the long-term growth potential of African markets. Africa's demographic expansion remains one of the strongest contributors to investor interest. By 2050, the continent is projected to have the world's largest working-age population. Investor reports from multiple global institutions highlight that this demographic trend supports long-term consumption growth, a larger labor force, greater urban expansion, and a growing middle class. These conditions create opportunities in virtually every sector, from housing and transportation to financial services, digital infrastructure, healthcare, agriculture, and manufacturing. In the United Kingdom, many investment firms have begun factoring these demographic advantages into their long-term portfolios. Institutional investors, sovereign wealth funds, pension funds, and private equity entities increasingly refer to Africa as an untapped frontier of global growth. This trend aligns with reports issued by the UN Conference on Trade and Development, UNCTAD, the African Development Bank, AFDB, and several UK-based economic think tanks. The data demonstrates that Africa's return on investment across several sectors, while variable and dependent on risk assessment, remains higher than mature markets that experience slower annual growth rates. One of the driving forces behind this shift is Africa's acceleration in digital innovation. Mobile money penetration has transformed financial inclusion in multiple African countries. Fintech firms from Nigeria, Kenya, Ghana, and South Africa continue to attract venture capital not just from within the continent, but from Europe, Asia, and North America. UK-based venture funds have participated in several of these rounds, signaling a growing confidence in Africa's digital transformation. The continent now hosts multiple tech hubs, with Lagos, Nairobi, Cairo, Cape Town, Kigali, and Accra recognized as leading ecosystems. Investors recognize that early entry into these tech markets offers potential long-term advantage as local solutions scale regionally and globally. Infrastructure development remains another crucial driver of investment interest. African nations collectively require hundreds of billions of dollars in infrastructure upgrades, covering transportation, energy, water access, digital connectivity, and housing. Because infrastructure gaps represent opportunities rather than obstacles, investors view these areas as long-term, impact-driven, profitable frontiers. UK financing institutions such as CDC Group, now British International Investment, have been active across the continent for decades. But recent years have seen an uptick in partnerships, co-financing agreements, and targeted investment funds aligned with Africa's economic priorities. Agriculture remains a foundational part of Africa's economic identity. As global demand for food, sustainable products, and agricultural technology increases, African countries have attracted foreign investment to modernize production, develop agro-processing zones, and integrate value chains. UK investors observing global food security concerns note that African markets offer vast arable land, favorable climates, and opportunities for mechanization and export. Agricultural transformation initiatives across East, West, and Southern Africa continue to draw long-term investment interest from European and Asian financial groups. Reports from the FAO and AFDB confirm that African agricultural output could more than double by 2030 with the right level of investment. Energy transition efforts across the world have also shifted investor attention toward Africa. The continent's abundant solar and wind potential, combined with the growing demand for renewable energy solutions, has made Africa a strategic hub in global energy planning. UK renewable energy investors have increasingly participated in solar farms, off-grid energy programs, and wind projects. Africa's green hydrogen potential has also emerged as a significant point of interest, with countries like Namibia and Mauritania positioning themselves as future players in hydrogen development. Global reports indicate that Africa could supply significant clean energy to international markets if investments continue at scale. Meanwhile, Africa's mineral wealth remains a defining investment magnet. As the world accelerates toward electric vehicles, battery storage technology, and advanced electronics, the demand for critical minerals like cobalt, lithium, nickel, manganese, and rare earth elements continues to grow. Investors from multiple countries, including the UK, monitor Africa's evolving mineral policies to identify new opportunities. Several African nations are increasingly focused on local processing and value addition rather than raw material exports, enhancing the investment appeal for long-term industrialization. Financial analysts in London note that diversification strategies play a central role in why more investors are studying African opportunities. Mature markets often provide lower yields, high regulatory saturation, and slower economic growth. By contrast, Africa's average economic growth projections remain comparatively higher, according to the World Bank and IMF. These long-term projections are particularly important for pension funds and investment houses that seek growth opportunities in emerging markets. Trade relations between Africa and the UK have also been undergoing significant recalibration. After the UK's departure from the European Union, new bilateral trade agreements and economic partnerships were established with several African nations. These agreements aim to facilitate smoother trade flows, reduce tariffs, and encourage private sector participation. UK businesses are increasingly exploring opportunities across Africa's manufacturing, logistics, creative industries, banking, and construction sectors. African financial markets continue to modernize, attracting foreign investors through reforms in stock exchanges, banking systems, and regulatory structures. Countries such as Kenya, South Africa, Nigeria, Morocco, Egypt, and Mauritius maintain some of the continent's most active exchanges, offering equities, bonds, derivatives, and green investment opportunities. UK investors benefit from expanding financial instruments that reduce risk and improve long-term portfolio stability. Urbanization also plays a vital role in Africa's investment attractiveness. African cities are expanding at some of the fastest rates globally. These rapidly urbanizing centers create opportunities in commercial real estate, retail, hospitality, public transport, and digital infrastructure. UK urban development firms have partnered with African governments and regional investors to develop housing projects, water systems, and energy networks. Reports show that infrastructure investment in Africa could exceed trillions of dollars over coming decades, creating one of the world's largest development pipelines. Tourism represents another area of investor attention. African tourism rebounded strongly following the global pandemic, driven by wildlife conservation efforts, cultural tourism, and improved air connectivity. UK investors maintain interests in hospitality, travel technology, and cultural preservation initiatives across the continent. Africa's regional economic integration is another significant factor. The implementation of the Africa Continental Free Trade Area, AfCFTA, represents the world's largest free trade zone by number of countries. This agreement encourages cross-border trade, reduces tariffs, and unifies markets. Investors in the UK and other countries see this as a transformative step for Africa's economic future, allowing for expanded manufacturing bases, supply chain coordination, and regional logistics. The AfCFTA creates a market of more than 1 billion people, making it increasingly attractive for global companies considering regional expansion. In the financial centers of London, analysts highlight that Africa's rise does not represent a threat to the UK economy, but rather an opportunity for strategic partnership and mutual development. The economic growth in Africa aligns with global diversification needs, technological innovation, and the expansion of new trade corridors. Many of the UK's leading investment institutions actively engage with African markets through conferences, trade missions, and cross-border finance programs designed to strengthen collaboration. As African nations continue reforming business environments, foreign investors increasingly recognize the continent's potential for industrialization, renewable energy leadership, digital innovation, and agricultural expansion. The shift in global investment patterns reflects Africa's growing role in the international economy and its increasing prominence in long-term investment strategies. Rather than depicting a narrative of crisis or exodus, the reality is that investors across the world, including those based in the UK, are broadening their horizons in response to Africa's emergence as a promising economic partner. International investment flows evolve with global growth prospects, And Africa's rising economic profile ensures that it will remain a central destination for investment discussions in boardrooms, financial analyses, and long-term strategic planning efforts worldwide.